Hi guys and welcome to my YouTube channel. My name is Zwannda and in this video today we'll be talking about tax-free savings account, right? So the way I will address this topic, I will cover some of the most frequently asked questions around tax-free savings account and we'll tackle it that way, right? So please don't forget to like, comment and subscribe if you like the content of this channel. Okay, so first of all, let's start by what is a tax-free savings account. A tax-free savings account is an account that was introduced in 2015 here in South Africa. So the government wanted to encourage South Africans to actually start saving, right? So tax-free savings account allows you to save without having to be taxed on your interest rates, on your capital gains, as well as your dividends, right? Which is great because that is a differentiator between tax-free savings account and any other investment accounts that you can have out there. So another important thing to note on tax-free savings account is that there is a limit to how much you can save, and this is rather important because if you exceed the limit that you expected to save, you can be taxed. So we need to stay within the limit so that we can gain the benefit of saving without having to be charged the tax, right? So can't allow you to save up to 36,000 annually and 500,000 500,000 in a lifetime, right? Which is a pretty good amount to each and every individual, and this is for everyone, child, adult, or our grannies. Every single individual in South Africa has that advantage of having to save 500,000 in a lifetime without it being taxed. So if you contribute 500,000 in your lifetime on your tax-free savings account, whatever interest that account acquire or accumulates, it's not going to be taxed, right? So if you're planning on saving on this tax-free savings account in a monthly basis, you need to save 30,000 a year so that in 12 months you have that 36,000 in your account, right? And also you need to make sure that you know that South African tax year starts in March and ends in February, so that you stay within the limits of 36,000 contribution in a year, right? So let me go to the first question that we'll be talking about. So there is a question which is normally asked, which is what interest rate can I get on this account, right? So different services provider provide different interest rates. So I have a screenshot here of a website called Money Today, which was writing an article about 8 best interest rates on tax-free savings account. They have FNB, which can give you up to 3.9%. They have Nedbank, which can give you 4.5%. They have Standard Bank, which can give you 3.5%. They have Old Mutual. It is as per the fund which you pick. They have APSA, which can give you up to 4%. They have Capitec, which can give you up to 5.3%. I have a video about this where I was talking about Capitec investments. You can go check it out. I elaborated more on this one. They have African Bank, which can give you 5.3%. They have Investec, which can give you 4.78%, right? So they also have easy equities, right, where you can buy ETFs on a tax-free savings account, and obviously the growth of the ETFs is determined by the performance of that ETF, right? Another frequently asked question is that, can I withdraw from my tax-free savings account? Yes, you can withdraw depending on the structure of the product which you choose to save your tax-free on, right? You will be able to withdraw, access your money. So let's say if you save with a bank, the one that I had with Standard Bank, you could actually withdraw it anytime you want. I think one thing that you need to be cautious of on the withdrawal portion is that the money which you withdraw from a tax-free savings account, cannot be replaced, right? It means you're withdrawing from that 500,000 that is of a lifetime, right? So let's say you save 100,000 and then you go and withdraw it on a tax-free savings account, and then you go withdraw it, right? So this simply means that for a lifetime, your contribution now it's only 400,000. That's the thing which you need to know. So another frequently asked question is that, can I have two tax-free savings account? So I understand why you would want to have two tax-free savings account. Maybe you want to have one with the bank where you know exactly how much interest rate you're going to get, and you also want to have one with easy equities where you want to depend on the growth of stock, right? So you can have two. That's the answer. You can have two, but the contribution of on the tax-free savings account overall on all your tax-free savings account should add up to 36,000, right? So you can have as many accounts as you want, but total of all the tax-free savings account should be 36,000. And if you exceed that 36,000 in a year, you will be taxed up to 40%, which is really a lot, right? And then you forfeit that benefit of maximizing on the tax-free savings account. So another frequently asked question is that, can I transfer money or can I withdraw money from my one tax-free savings account and go and start onto another, right? Let's say you have one with the bank, you're not happy with the performance and you want one with another bank provider, right? So what you need to do is to issue a note to your bank to say you want to transfer money from one service provider to another. You can't withdraw it, because if you withdraw it, you actually are reducing your contribution amount, right? So if you want to transfer, you issue a note and your one a reputable bank or a reputable service provider will transfer it to your other. So these can only be done by the services provider themselves, not you having to withdraw and then deposit to another one. So another question which is frequently asked is, can I open a tax-free savings account on behalf of my kids, right? The answer is yes, you can do that. South Africa allows you to open on behalf of your child and you can start saving for them. But whether is the right thing to do or not, because each individual has an opportunity to do this once, right? So let's say you maximize that opportunity for your child, that your child won't have that benefit of having to save 500,000 for themselves, which is not taxed, but you would have done that for them, right? It is actually good if you're doing it for them, if it's their money, but if you're doing it for yourself just to double dip on the tax-free savings account, I think it's a little bit selfish. But you know, it's not a one size fit all. You see ways you see fit, and then you choose a better decision, right? So let me quickly check another one of okay, so which accounts qualifies on the tax-free savings account, because you can't just get tax-free savings account on all accounts. So I have written some here on my phone. So you can have a tax-free savings account on fixed deposits. I've seen Investec offering that. On unit trust, I've seen one for Allen Gray. There's a retail savings bonds that provide a tax-free savings account. There is a linked investment product. They're linked because they're linked to inflation. And there is ETFs as well, which I have been mentioning that you can find it on maybe Satrix or the Easy Equities platform or other ETF providers. And these are the investment accounts that you can use to save your tax-free savings account or get the benefit of tax-free savings account, right? So let me see if I can get another frequently asked question. I think that will be it for now. And if there's anything that I didn't mention that you think I missed, you can just comment below and we can talk about it there. So before we can go, I wanted to give you some things which you need to think about when you are opening a tax-free savings account, right? So if you open a tax-free savings account now, by the time 13 years 0.8 months, you would have successfully reached your limit of 500,000 in a lifetime, right? And that is if you are contributing 3,000 per month. So if you contribute 3,000 per month, every month, every year, by the time it is 13.8 years, you would have reached your limit, and your account would have matured to up to 1.3 million. So it seems like a lot when you're here, but 13 years is not a lot. And if you don't use the strategy, or if you don't put strategy together to get there, you're most likely to not even going to have this million after 13 years. So I think it's very important that we maximize our tax-free savings account. It's something which I'm still learning, because before I knew about tax-free savings account, I already had other investment accounts which actually I do incur tax on. So I'm leaning towards tax-free now, just using the one which I get a lot more interest rates. And then I'm trying to make sure that in 13.8 years I would have maximized my tax-free savings account, and actually having a million already as well, right? So that's another thing that you can think about and try to figure out how you can navigate yourself around that. All right. So also I mentioned that the tax year starts in March and in February, and the limit is 36,000 on a year and 500,000 in a lifetime. And also this actually benefits you in a long run more than it does in a short term, because you actually relying on time and compound interest to play on your side for it to work. So the name savings kind of make it like it's a short-term thing, but it's actually an investment account, right? You can't withdraw and deposit it on another service provider. That's another thing. You need to transfer it, unless if you really want to withdraw the money and use it. And yeah, you must be cautious of the fees that tax-free savings account providers actually charge, because some services provider charges a lot. Some you find that they're charging 3%. That means that they eat 3% into your interest rate, and then you add inflation. That means that you're actually gaining your money. Is actually gaining no value. So you need to be cautious of the charges that each tax-free savings account provider is offering, right? So the lesser the better. That's it from my side. Thank you guys for watching, and like I said, comment, like, and subscribe if you like this content.